How do I preserve the money I've worked so hard to save? How do I safely stay liquid so that my money is available anytime? And how can I make it grow without risking it all? These questions can best be answered with a surprisingly simple yet very effective solution we call the perspective triangle.
We ask the question, what anchors your decisions? Because it's important as an investor to have some form of discipline in the way that you invest.
The perspective triangle is a way to see and manage your assets as if they were given three distinct but complementary mandates or functions. The first mandate, the insurance mandate. Mandate number 2, liquidity. Mandate number 3, growth and income.
What the perspective triangle offers is a very basic discipline, and it is simply this: not only a diversified portfolio, but a way that you can see when and how you have to shift from one asset class to the other.
These three mandates can be viewed as the three sides of a triangle, or the three sides of a financial house. And just as in building a house, the first thing that needs to be done is the securing of a firm foundation. This perspective triangle has been the philosophy of the McAlvany Financial Group for almost 4 decades. The base of the triangle, the insurance mandate, is gold, silver, platinum, and palladium, physically held. For thousands of years, gold and silver have proved to be the most secure means of preservation of buying power or value. Though paper assets and currencies rise, fall, and even fail, physical gold itself has maintained a very consistent buying power throughout the centuries, and it never fails. It is gold's amazing ability to preserve buying power that makes it the asset of choice for the foundation of the triangle, the insurance mandate. The right side of the triangle, the liquidity mandate, is that which is kept in cash in the bank in savings, checking, short-term CDs, even treasury bills or money markets. Obviously, with the declining value over time of all currencies, it's important not to overinvest in this side of the triangle. Inflation, whether gradual or abrupt, is the major threat to the buying power of these assets. This is why this side of the triangle must be supported by the foundation in gold to counteract the loss of buying power in your liquidity mandated savings. The left side of the triangle, growth and income, is that which is kept in stocks, bonds, annuities, and other investments which would not normally be kept in cash or in gold. Historically, this side proves to have the most risk as well as the most reward. It's unfortunate, but this is the side of the triangle that most people begin and end their investment activities.
We turn that on its head and focus on the risk first and say, if the reward is easy, we'll look for it, but only after we've prioritized risk mitigation.
With these three mandates in place, preservation of assets or insurance, liquidity, and growth and income, your perspective triangle provides a portfolio that recognizes and hedges risk, allows for daily requirements of household management, and financially invests for reasonable reward and long-term growth.
You have to have a discipline in order to be an investor. What the perspective triangle offers is a very basic discipline, and it is simply this: not only a diversified portfolio, but a way that you can see when and how you have to shift from one asset class to the other. As there's excessive growth in one portion of your asset base, you must simply re-diversify, either into the liquidity portion or into the growth and income portion.
Put simply, your perspective triangle takes reasonable appraisal of the world we live in and positions your portfolio for the best and worst of times.
Coming back to the perspective triangle, it is what anchors our decisions. We'd suggest it should be something that anchors yours. It should be your perspective on risk and reward.
The perspective triangle.